Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Wednesday, the 14th of August. Starting off with the FTSE 100, which is above its 50-day line there at 81.95, and also back in that rising trend channel from last September. The floor of the channel there, 82.50. Above that, looking for obviously a retest of recent resistance around the 8400 mark. Big picture target is up to as high as 87.30. But obviously at the moment that seems quite a long way away. The ideal scenario is that we stay at least above the 50-day moving average at just below 8200, whatever happens after a double bear trap that we had over the last few weeks. RSI at 56, which is right where we wanted in terms of further potential upside for the market. Moving on to the DAX, and here we had a tentative recovery in recent days. We were blocked by that old support line becoming resistance there at 17,800, but above that, looking for the market to not only fill the first gap down that we had earlier this month around 18,000, but also hit the 50-day moving average 18,200. On the downside, ideally we don't go back below the 200-day line now at 17,500. Anything missing at the moment is the way that the RSI is below neutral 50, so we want to see that conquered before we get too excited about the situation, but we have had a gap close buy signal some days ago. The Dow is next, and here we've got a situation where we're back above the 50-day line after a sort of full start that we had yesterday, or the day before yesterday rather. 39,500, the level of the 50-day line. RSI at 50 as well, so it looks as though we've got enough gas in the tank to get back up towards the highs, 41,000. If you're fussy, maybe you want to see another end-of-day close or an end-of-day close back above that mid-July support around 39,800, but we've basically done it now. Bitcoin is next, and here it's been rather wobbly in the recent past, but looks like we bounced basically off the floor of that rising trend channel from October. That's 58,600 or so. We're back near the 50-day line. So hopefully on this attempt, after the big bear trap that we had earlier in the month, we can head up to the main resistance line there, the March resistance line there at 70,000. Top of the channel is as high as, well, basically up to 89,000, but obviously at the moment that seems a long way away. We're just hoping that above 58,000 we head up to 70,000 for this market. The other missing ingredient at the moment is the way that the RSI is still below neutral 50. We already had one failure at neutral 50, so we really want to see this indicator at 50 plus before getting too excited. Gold is next, and gold has been the star of the show in terms of the major markets here, still holding above 2,500. We'd like to see this market continue to stay above the old resistance there, the May resistance, former record highs around 2,450 and above that. Still hoping and praying for 2,600 by the end of this month at the top of that rising December trend channel. Moving on to the stocks, and starting off with Clontarf, which I haven't looked at for a while, but it looks as though we've broken out of that post-July negative spell. The line there around 0.08, above that looking for up to 0.14, 0.15, basically retesting July resistance, hopefully by the end of next month or even sooner. Want to see this market stay above the 50-day line. We've had several support points above it, which is normally a leading indicator on the upside, and that's at 007. RSI at 55, again in a good place for a recovery. On to EnergyPathways, but people are getting very excited about the company's prospects. It seems to have negotiated the Labour government and all its net zero madness. Just looking for this stock now to break the main resistance line here from February around 2.75 pence on an end-of-day close basis. We've obviously had one attempt earlier in the last week, but above 2.75, then the next level up would be back towards 3.75. And that was January resistance on the way down. I suppose the only negative here may be that the company takes advantage of the recent share price rise and raises some money. On to EQTEC, which we had the suspicions that there would be a turnaround, and that has come to pass. Rising trend channel base, we've gapped off the low finally as well, which is normally a decent signal, and we've got the 50-day line rising as well. So hopefully if we can close above recent resistance around 1.4 pence on a regular basis over the next few days, we can head back to the top of the range and 2.2 pence, which is the top of that channel by the end of next month. Another stock where suspicions that there would finally turn around has come correct in the way that Firering has bounced above its 50-day moving average there, around 3.2 pence. The initial target obviously is normally the 200-day line, 3.8 pence. We've been near to that. But the ultimate target, maybe by the end of this month, would be up to 4.3 pence. At the top of that broadening triangle from back in March, after the bear trap rebound from below May support there at 3 pence. We haven't been above the 200-day line since basically the spring of last year, so that would be quite a transformation for the shares. We also gapped off the low as well. One of our favorite signals. That's basically a bear trap gap reversal situation. Moving on to Greenroc, which also looks as though it's revitalizing itself. We've had a U-shaped turnaround there, which is normally very strong. We've also had a gap close today, so the gap there around 1.3 pence, end of day close above that. We're looking for basically the 200-day moving average at 2.1 pence by the end of next month. You can see also there's the ultimate target there as high as 2.75 pence at the top of that January broadening triangle. But I think the 200-day line is probably the place to go, given that we've had an attempt back in June to get up there, and obviously the last time we were there was back in October, November. Only back below recent 1.15 pence support, multi-tested, really delays the upside scenario. On to Genflow, which has been rather quiet of late, but maybe it's getting ready for some action here. We've had a double gap close there, so two gaps down there at the end of last month and the beginning of this month, above 2.2 pence on an end-of-day close basis, basically looking for the May-June resistance around 3.25 pence by the end of next month. The other sizzle here is the way that, a couple of sizzles actually. The one is that we've got bullish divergence there, so lower lows for August, but higher RSI trace, and the other final one is that we bounced off a rising 200-day moving average at 1.9 pence. So as long as we're above that, feeling that we can head higher. Stock, which I don't cover very much, but it's managed to nearly hit the top of the rising trend channel base that we were looking for, around 9.75 pence, and the 200-day line. We haven't been above the 200-day line for ages here, basically since the end of 2021, so that is, we're looking at a potential significant turnaround, and looking for it while we remain above resistance on the way down around 8.25 pence. So hopefully Ixico will step up to the plate. There's also a gap to fill up to 12 pence for those who are optimistic about the stock. I covered Jersey yesterday, and the shares are obliging at the moment, where the view here was that we had a possible U-shaped turnaround. That's proven to be the case. Initial target, the old support there, June support, 92 pence. Ultimately looking for a best case scenario here. I'm not quite sure what would do it though, but on a fundamental basis, but up to £1.37 at the top of that falling trend channel from back in November. There was also bullish divergence, so it wasn't completely the shape of the turnaround which did the trick there. Onto a stock which I haven't looked at for a long time, MyHealthChecked, and here gap close buy signal yesterday and a bear trap as well, so bear trap rebound from below 9 pence, looking for up to 11.5 pence at the top of that falling formation from the turn of the year. But the main thing here is just the glimmer that the shares are turning around on a sustained basis. On to yesterday's star, which was Neo Energy, and here you can see that we narrowly missed our best case scenario target there, 1.2 pence, the high yesterday 1.15, but it is good in terms of the support. We were allowing down to 0.85, which was the resistance on the way down, but so far found resistance above 0.9, which is very encouraging and does suggest we're actually in a mid-move consolidation and could head up rather higher than 1.2, but let's go for 1.2 pence at least initially. Moving on to Novacyt, which has had several attempts to break through the 55 pence level. Feeling that this could be the one after so many failures, but at least while we're above the 50-day line at 49 pence, looking for the shares to fill the gap up to 65 pence. Obviously, if you're cautious, you wait for an end-of-day close above the resistance line there from back in May, and the 200-day line at 54 pence before assuming that we have going to have some follow-through on the upside. On to the last two. The first one, almost an educational situation in the sense that we've seen Playtech rush up today, but actually we had on Monday the gap close buy signal there around £5.34, £5.35, and obviously we've shot up today, so something to keep an eye out on that. The rally started with an unfilled gap through the 50-day line again, another one of our favourite setups there. Finishing off with Silver Bullet, which what has not been trading or living up to its name in the recent past, but it looks like we might be ready for a fresh rally to the upside, on full gap to the upside through the 50-day line there at 81 pence, and looking for the shares to head back towards the 120s, maybe by the end of next month. Early days yet, but let's see if that gap is significant. That's it for me today. More updates tomorrow.